Winston and Felix here, and let me tell you why we are out. There are a couple of data points I want to run you through, and then I want to tell you what I'm doing and what I'm not doing, and I think it matters, and I think you deserve to understand it if you're an investor. The first thing is a couple of data points. So, consumer confidence was down more than expected this month. The Conference Board's index, which basically tells you future expectations, is at a level that would normally indicate a recession within 12 months. Mortgage rates are at insane levels, right? 8.7% home sales fell last month. So the housing market is dead. The commercial real estate market is a total flippin' shambles and disaster. Credit card losses are increasing. Winston's obviously concerned about that. Bankruptcies have increased year over year for 13 months in a row. And the strategic oil reserve is at a 40-year low, and oil is allegedly heading for, I'm getting my feet wet here, allegedly heading for $150. I know it's come down a little bit yesterday, but I wouldn't hold my breath on that one. And then you've got 71% of Americans living paycheck to paycheck. And this is not a doom and gloom video. This is a strategic, what makes sense right here, right now video, right? And Winston is strategically rolling in the sand. Let me show you. And there he is. Big wet tail, big bushy wet tail. Okay, if you understand how funds work, how algo funds work, how computer traded funds work, you know that they are buying at certain levels and they're selling at certain levels. And last week they sold a lot. And that's why, that what happens in the market is what happens in the market. Is it going to get worse? Is it going to get better? Well, potentially it's going to get a heck of a lot better. This week, basically, if the market's flat, they're going to sell $53 billion. So they're still sellers, it could get a lot worse. But over the next month, if we have a flat market, they're still going to sell a ton. But if we ping up some sort of dead cat bounce, exuberance into Christmas type thing, some decent earnings numbers, some big techs coming in, they will buy $187 billion of stocks, which is insane. When are they going to do that? Well, above 4,355. That's sort of the level you want to be at. But you might get the melt up, you might get the Christmas rally, but what's the big but? We're late in this cycle. The recession isn't priced in. All you would need is decent earnings, but with earnings growth, with profit growth, not negative, not disastrous, just not going up as much as in the past. A slowdown in growth is all we need to turn this market into beginning of the new cycle. And what's the beginning of the new cycle? Beginning of the new cycle is pricing in a recession. And yeah, rate cuts will happen at some point then, but the bad news will no longer be good news. Bad news will actually be bad news. What do I mean by that? At some point, we have to realize that, and I made a video on this earlier on NVIDIA, NVIDIA isn't going to grow forever at 100% a year, or even at 40% a year, which is forecast for next year, or at 30% or something like that. It's just not possible. You can't grow at those levels forever. At the moment, the market's pricing that in. So when realism kicks in and growth comes back down to 10%, 12%, 15%, good, decent, impressive stuff, then these valuations aren't going to last. And is the market going to bounce back in the long run? Probably. But if you look at what's driven the bull rally of the last 10, 15 years, it's been money printing by the Fed. It's been zero interest rates, which apparently was going to last forever. Of course, it didn't. And right now, interest rates are super high. Every single time, and I'll pop a chart on the screen here for you, every single time rates have gone up, the Fed has raised them too much. Every single time they've broken something significant. So far we've only broken 4 banks and they've bailed them out again. They're going to keep hiking the rates by the way it looks, another 0.5% at least, or 0.25% at least, and they're shredding money. Without the money pump that we've been enjoying for decades now, the market isn't sustainable at these levels. So what does that mean? Is that the doom and gloom, should you just go and bury all the money in the basement? No, of course not. Inflation is a terrible thing. So cash isn't, I don't think cash is king. Cash is only king if you're waiting, if you're timing, and that's rarely the greatest of ideas. So what's the solution here? Well, for me, it's trading, being smart with your money. If you've got enough, I think buying properties in cash is a great idea at the moment. You could always refinance them later if you wanted to, but if you've got that kind of cash lying around, because you can get some really good deals right now, and then you can enjoy some decent yield. The bond trade is coming in later than we thought. Why? Because they raised rates more than we thought. But if interest rates, say if you bought a 10-year treasury today and interest rates went down a percentage point, you'd make about 9%. If interest rates went down 2 percentage points, you'd make about 18%. As soon as it was expected those rates were going to fall. When's that going to happen? I don't know. Nobody does. Could be next year, could be the year after. A lot of this depends on oil prices, because we could get an inflation spike from that. That's an outlier risk, but it's still a real risk. So there's just a lot of risk here. We've got super high valuations. We are late in the cycle. The drug drip of the money printer has been turned off and is now shredding money. Rates are higher than ever. They're staying higher. They only started raising rates 18 months ago, and there's an 18-month lag with which rates come and hit you in the face. And part of that is also that large companies refinance themselves and have so much debt that they issued at very, very low costs. So they're not really immediately impacted, just like the US consumer has got 20, 30-year mortgage rates. So they're not really that impacted. But the longer this continues for, the longer this high interest rate, money shredding environment continues for, the greater the downside risk. And Winston's very aware of that. That's why he looks so relaxed. So I really don't see the point in buying stocks right now. I really don't. I just think it's a mug's game. Now, if you have a really long horizon and you've got a plan where you buy $1,000 of stocks every Monday or every first of every month or something, I don't want to dissuade you. It's not financial advice. You know, keep doing that long enough and you'll be totally fine. But to me, it just doesn't feel like this makes sense. The downside risk is there. And I said this at the beginning of the year. Of course, the market went up significantly more. You know, we discovered AI, 2 letters that apparently change all valuation metrics and all of that. And I've been through this, been doing this long enough to recognize patterns and sound bites and headlines that I read in 1999, that I read in 2006 and 2007. And I'm not doom and gloom. I think the world's a glorious place. I think we can all make an absolute fortune, and I think we can live a glorious life so we can sit here on the beach on a Tuesday. Is it Tuesday? I think it's Tuesday. But there are moments when rewards is great, risk is low, and there are moments when risk is high, reward is. And for me, it's one of those scenarios. So I'll keep trading. I'll keep showing you guys how that works. We've got a live trading training on Friday, because the last one was full again, and another 500 people will come and learn this Friday. So come and check that out, felixschwenzer.org/webinar. And, you know, of course, Winston will lead it. But really, like, you need to, but I think it's very, very, very much a good idea. That pier there behind me, by the way, is a temporary thing from the last hurricane, I think. Another one coming this weekend. So if you spend the amount of money and time that you spend on making money, think about schooling, college education, whatever courses you've attended to be good at your job, you spend the same amount of effort on making money from your money, your life will actually massively change, and you'll finally get that financial freedom that you actually deserve. So time allocation is an important thing. And for me, I like buying stocks for the long run. Easy, one click every Monday. But right now, it just doesn't feel right. So right now, I look for bargains in property. I might look for some bonds, probably will, over the next 6 months, 12 months. And I'll keep trading, because I can make money whether the market goes up or down. And I put a video a little earlier today, and one of the trades in that is literally an NVIDIA trade. And NVIDIA could go up 10% or can go down 100%, and we still make money. And it's those kind of market neutral trades that can make us quite a lot of money, especially if we don't know which way things are going. But for that, you need to understand a little bit deeper how the money market works than most people ever get to. And most people are just put up by having to learn something. But seriously, it isn't difficult. I think a 12-year-old can do what I do. I don't think it's rocket science. So come and join me. As I say, felixschwenzer.org/webinar. And we're going to find some nice dinner now here. It's a glorious little afternoon. There's the Hong Kong Golf Club up there and some really spectacular houses. And you're going to enjoy beautiful weather before the hurricane comes in. locks us back in to our home for a day or two. So thank you very much for watching and tuning in. I don't want to discourage you from investing. Never my intention. I just want to encourage you to understand more, learn more. That's what the community is about. We want to make 1 million people financially free. And I love the fact that you watched this far. I'd love it if you smash the subscribe button. More people get to see it. And let's see what little Winston's up to, shall we? This is, by the way, the first speech we ever took him to. We adopted him, and he was basically too weak to walk. He spent 6 months in a cage, underfed. Some bastard breeder was trying to keep him small so you could sell him for a high price, and thankfully somebody rescued him. So we took him swimming a lot at the beginning because he just couldn't really walk. So this was the first speech we took him to. And when we get close to here, he's like, oh my God, I know where we're going. I'm excited. Aren't you, little Winston? So I wish you a beautiful day. Thank you for watching. Thanks for tuning in. Good point.